So firstly, I will explain about the background of Parawa. Gigi Coffee is a Malaysian coffee brand established in 2019, founded by Marcus Low, and has expanded to 150 outlets nationwide by early 2025. And the company shows a strong brand acceptance and market presence in Malaysian F&B sector. For marketing and innovation strategy, the company has implemented the strategic collaboration, seasonal and limited time offerings, and promotional campaigns and giveaway. As for management and leadership strength, the company shows a strong strategic planning, and the leader also have the growth-oriented mindset, and the management capability also support the long-term business sustainability.
Next, I will presenting a proposed loan facility and utilization. Gigi Coffee Sdn Bhd, a company established in 2014 that has successfully grown from a local SME into a strong Malaysian brand with over 150 outlets nationwide. Reflecting a proven and scalable business model with solid repayment capacity, we are seeking a total facility of 3.2 million to support a strategic expansion into the higher education segment through the opening of 8 new outlets across UiTM campus nationwide. Targeting a stable and captive student market with an estimated capital expenditure of 400,000 per outlet. To ensure effective cash flow management, the financing is structured into 3 components: a 1.2 million term loan with a 10-year tenure to finance renovation and civil works, a 1.2 million hire purchase facility with a 9-year tenure for coffee machinery and solar installation, and a 800,000 revolving overdraft to support working capital and manage seasonal fluctuation. The facility is secured by a landed property value at 4 million, resulting in an 80% loan to value ratio that provides a strong margin of safety for the bank. Overall, this proposal aligns well with the company principle in terms of purpose, ability, repayment, and security, positioning it as low risk and sound credit proposal.
This project involved the establishment of Gigi University Cafe at 8 selected UiTM campuses across Malaysia, including Sabah, Sarawak, Johor, Pahang, Melaka, Kelantan, and Negeri Sembilan. The project is an expansion of Gigi Coffee Sdn Bhd existing cafe operations, specifically targeting the university market, such as students, lecturers, and staff. The total financing required is 3.2 million, which will be used for cafe renovations, furniture and equipment, working capital, and also the installation of solar power to support sustainable operations. Each outlet will function as a dual-purpose space consisting of a cafe area for food and beverages and a learning space equipped with discussion areas, printing facilities, and charging sockets for students. From a credit perspective, this project is aligned with Gigi Coffee core business, as the company already operates over 150 outlets nationwide, including university locations. However, several risks exist. Operational risks arise from managing multiple outlets across different states, but this is mitigated by Gigi's strong operational experience. Financial risk relates to short-term cash flow pressure, although this is reduced through steady revenue growth and long-term financing. Market risk depends on academic schedules, but demand remains relatively stable within university campuses. Overall, the project shows manageable risk, strong business alignment, and positive sustainability impact, making it viable expansion for Gigi Coffee.
Next, I will present the ownership and top management profile, focusing on the borrower's character and capacity. The company is led by its founder and group CEO, Marcus Low, who holds a Bachelor of Engineering and has demonstrated discipline, growth-driven leadership since 2019. Under his direction, the business expanded rapidly while maintaining strong operational control. The management team is stable and experienced, with the same board of directors, Low Bok Tet, Low Kai Lun, and Low Sin Hun, serving consistently for over 5 years. This ensures continuity in strategic planning and governance. The company also benefits from strong family business support. Marcus Low received guidance from his father, an experienced businessman, contributing long-term vision, ethical values, and professional integrity. In terms of resilience, the company successfully overcame COVID-19 challenges and achieved significant growth, expanding from one outlet to more than 150 outlets by 2025. This reflects strong adaptability and execution capability. Succession strength is ensured through family involvement and a multi-director structure, reducing dependence on any single individual. In addition, directors act as personal loan coordinators, strengthening lender confidence. Financial strength has improved significantly. After losses between 2020 and 2022, the company recorded a profit of 4.1 million ringgit in 2024 and net worth turned positive at 5.06 million ringgit. The borrower also demonstrates strong repayment character with a clean credit record and no legal or late payment issues. Finally, the commitment to the loan is shown through the pledge of unsecured property worth 4.1 million ringgit for a 3.2 million ringgit facility, reflecting strong confidence and good faith. Overall, the ownership and management profile indicates strong leadership, financial recovery, and high credibility as a borrower.
In this section, I explain the business overview, operation and risk of the company. Gigi Coffee operates a fast-growing cafe chain in Malaysia food and beverage sector, focusing on coffee and pastry products that suit modern consumer lifestyle. This business emphasizes quality, sustainability and innovation, generating revenue through product sales and consistent service quality. Operationally, Gigi Coffee practice ethical sourcing and sustainability supported by trained staff, modern equipment and reliable supplier, including partnership with local farm to ensure consistent product quality. This allows efficient delivery of product and service to customers. Other than that, Gigi Coffee offers specialty coffee using 100% Arabica beans, plant-based milk alternative, and innovative products such as installed cold brew and eco-friendly packaging to meet the health-conscious and sustainable market demand. Despite operating in a highly competitive market, this business shows a strong growth with a rapid outlet expansion and halal certification, resulting in a moderate business risk and a strong ability to sustain revenue and operation.
So next, we move to financial analysis. Firstly, looking at the profitability chart, the most significant takeaway is the swing from 2020. The company started with a massive negative ROA of negative 69.63%, which is typical for a heavy investment startup phase. By 2024, maintaining a double-digit ROA of 13.2% alongside a profit after tax of over 4 million ringgit prove the business model is now self-sustaining. Next is working capital days. It moved from 1,223 days in 2020 to just 34.28 days in 2024. This chart confirms that Gigi Coffee has mastered its cash flow cycle. They are collecting cash from customers fast enough to fund their growth without relying solely on external debt for daily operations. Next, the liquidity chart shows the current ratio declining from a very risky 0.17 to 0.62, while it is still below the ideal 1.0. The upward slope of the line is what we care about here. It shows a consistent reduction in short-term risk over a 4-year period. And lastly is the asset turnover. In the beginning, the asset turnover was low. This is as expected. Gigi Coffee was in an asset accumulation phase. The upward trend we see here is the most important part of the graph. It shows that for every ringgit spent on new coffee machine or a new outlet, the company is generating significantly more sales than they used to. This is operational efficiency. They optimize their supply chain and store layout to ensure no asset is sitting idle. By 2024, the asset turnover reached its peak. This tells us that Gigi Coffee has achieved economies of scale. For the capacity, Gigi Coffee has shown strong improvement from 2020 to 2024, with higher ROA and a turnaround from a net loss in 2021 to a profit after tax of 4.02 million ringgit. This indicates better asset utilization and improved repayment capacity. The company also became more efficient operationally as working capital days reduced significantly, showing a faster cash conversion cycle. Despite some fluctuation, EPS remained positive, reflecting the continued profitability. And for the capital, it refers to how the company finances its operation. Gigi Coffee strengthened its capital structure in 2024 with a lower gearing ratio and reduced reliance on debt. The improvement in the debt-to-asset ratio and positive retained earnings shows a stronger equity base to support long-term growth.
Next, I will present about economy, industry and market. The overall economy and industry outlook remain favorable, supported by Malaysia's strong GDP growth of 5.2%, which continue to drive consumer spending in the lifestyle F&B segment. The local cafe industry is projected to grow to 5.8 billion by 2029. With an accelerating CAGR, while the global cafe industry remains resilient, providing a stable environment for Gigi Coffee to sustain operation and meet its debt obligation. The expansion into UiTM campuses further strengthened Gigi Coffee competitive position by securing a captive market of students and staff, which offer more consistent demand compared to high street location. This Gigi University concept, supported by a high engagement digital loyalty application, differentiate the brand from competitors such as Zeus and T-Life, enhances customer retention and reduce overall market risk. In terms of risk management, the company is proactive in addressing external challenges such as rising utility and labor costs. The installation of solar panel under this project acts as a long-term hedge against electricity price volatility, while the combination of efficient operation and stable campus-based location help buffer the business against broader market fluctuation.
For the credit security overview, the loan application by Gigi Coffee is supported by both tangible collateral and guarantees, which provide a strong secondary repayment sources for the bank. The collateral is a shop lot unit at Icon City, Bukit Mertajam, Penang. It was registered under freehold land title number 100208885. The property was valued at 4.1 million as of October 2025, which is higher than the proposed loan amount of 3.2 million, providing a strong security coverage. Being a freehold property, it carries a lower legal renewal risk, is highly marketable and allow the bank to obtain the first legal charge and further reducing risk. This shop lot unit in Icon City, Bukit Mertajam, Penang is also a strategic location and continuous price growth that might help mitigate potential collateral realization risk in adverse economic condition. In addition to the collateral, the loan is supported by individual guarantees from the company director itself, which is Low Bok Tat, Low Kailon and Low Siu Hon, and also corporate guarantee from BT Brand Sendirian Berhad, which is the major shareholder with a payout capital of 1.5 million. This combination strengthens the enforceability and security of loan under Malaysian law. In conclusion, the proposed collateral and guarantees are adequate and acceptable, proving a strong credit security to the bank and reducing both collateral and default risk.
I will explain the credit analysis using the 5Cs model. First, character shows low risk. The company has strong leadership and remains stable after COVID-19 with no continued expansion. No mitigation is needed. Next, capacity has moderate risk. Liquidity is weak with a current ratio of 0.62 and negative working capital. To reduce risk, loan repayment should follow cash flow with monthly installments. For capital, the risk is also moderate due to high leverage and reliance on external funding. Mitigation includes retaining earnings and receiving dividends during the loan period. Conditions present low to moderate risk because of strong competition in the food and beverages industry. Continuous market monitoring and customer feedback can help manage the risk. Lastly, collateral is low risk. The property value of 4.1 million cover the loan of 3.2 million. Annual review of collateral will ensure adequate security.
I will talk about a Campari model. First, character. Character is a low risk due to proven track record, strong brand and clean audits over 5 years. Ability is moderate risk because high gearing increase repayment pressure, so close monitoring of cash flow and financial ratio is required.
Next, margin of financing is low risk as profit margins are stable and improving. Next, the purpose is low risk since the loan is clearly for business expansion and sustainability initiative. Mitigation is progressive disbursement based on project milestones. Amount is a moderate risk because the loan size is relatively large compared to equity, so financing margin should be limited and equity contribution required. For repayment, risk is moderate as it depends heavily on business performance and cash flow sustainability. The mitigation is setting repayment schedule aligned with project cash inflows. Lastly, insurance. Insurance is low risk since exposure reduced through insurable asset and business operation with comprehensive coverage in place. Credit decision. The loans are approved with condition. The justification is that the loan application is acceptable based on the 5Cs and Campari model and lending principles. Risk exists, but they are manageable with proper structuring and mitigation. The term loan will finance cafe equipment, working capital and solar panels with a facility amount of 3.2 million ringgit over 10 years at BLR plus 0.5% per annum. The higher purchase facility will be used to acquire equipment, tables and chairs amounting to 800,000 over 9 years at BLR plus 0.5% per annum. The overdraft facility of 800,000 will support working capital and daily operation on a revolving basis at BLR plus 0.5% per annum. Lastly, the sustainable financing of 400,000 will fund the installation of solar panels with a tenure of 7 to 10 years at BLR plus 0.5% per annum. For the credit security arrangement, the collateral provided is a freehold shopfront located in Icon City, Bukit Mertajam, Pening. The collateral has been valued at 4.1 million based on expert appraisal. This collateral will secure the 3.2 million term loan or sustainable financing facility. Based on a loan to value ratio of approximately 1 to 20x, the loan amount of 3.2 million is adequately covered by the 4.1 million ringgit collateral value. Since the land is currently unencumbered, this will be the first legal charge placed over the property. The guarantor for the facilities consists of 3 directors. Firstly, Low Bo Tex, secondly, Low Kai Lun, and thirdly, Low Sin Hun, all providing personal guarantees, as well as PT Bank Sdn Bhd as the corporate shareholder providing a corporate guarantee. The key condition precedent include the execution of the loan and facility agreements, the first legal charge over the shop lot, registration with the land office, receipt of a valid valuation report of 4.1 million ringgit, and the execution of both personal and corporate guarantees. In addition, satisfactory CTOS, CCRIS, and CCM checks are required along with confirmation of insurance coverage on the collateral property. For drawdown condition, disbursement will be progressive and based on verified usage supported by invoices, contract or quotation. No drawdown can occur if there is an event of default, and all facility documentation and securities must remain valid. In addition, the borrower must show satisfactory financial performance and account conduct before funds are released. For the credit covenants, the borrower must maintain satisfactory financial performance, keep the business as a going concern, and submit audited financial statement annually. The charged property cannot be disposed of and dividend cannot be paid without bank approval. Insurance coverage must be maintained throughout, and the bank reserves the right to review terms if there are material adverse changes.